Okay, dokie, let's do the snapshot review here of unit number 15, the real estate market economics. So the first thing we did was we talked a big picture about the market systems, supply and demand from the high level. And supply, goods or services available for sale, lease or trade. Demand, goods or services desired for purchase, lease or trade. Supply and demand, pretty simple. Then we got to price and value. The pricing mechanisms quantified value of an exchange. And then the value components we learned were desire, utility, scarcity, and purchasing power or transferability. And I'm going to tell you that that's a great one to kind of latch onto. That drives value. Productivity and cost. Cost plus profits equal the minimum price of a product. Production costs possible components of value, and it depends on the production costs, and those could be determining factors to the value of an asset. Market interaction. A market, transaction arena where suppliers and demanders define value through the price mechanism. And if price increases relative to demand, price decreases. If demand increases relative to supply, then prices increase. And these simple correlations are items that you definitely want to know, because I bet you those are simple questions that end up showing up on exams. What is market equilibrium? Remember, markets are always trying to equalize themselves or would prefer being in equalization. Supply and demand tend towards balance where they are equal. Market equilibrium, price, cost, value, theoretically the same. Market imbalances are caused by changes in supply and demand. The real estate market dynamics that apply. Economic characteristics of real estate. Again, this is a good one always. Governed by the supply, the demand, the price, the costs, the value components, and governmental influences. A great statement right there. And then there's this thing that we learned about called inherent value, which also in many books could be called intrinsic. Unique appeal, immovable, supply, illiquid, slow response to cycles, and a decentralized market environment. Okay, all of which contribute to the economic characteristics of real estate. Then as far as real estate supply and demand specifically, supply, property available for sale or lease, measured in dwelling units for residential, square footage for commercial or industrial, and for acreage in agricultural, influenced by costs, finance, returns, and governmental regulations. That seems to be a staple. Demand, property buyers and tenants wish to acquire, measured in households. So the demand side is measured in households, again, square footage for commercial and industrial, acres for agricultural. Influences. Residential is the quality, the amenity, the price convenience, retail, trade areas, sales, competition, site access, visibility, growth patterns. Office looks to efficiency, cost, functionality. Industrial space looks for functionality, labor, regulatory compliance, access to labor, supplies, and distribution channels. All right, so all of these different types of properties look to different things economically. Base employment, total employment, and population determine overall demand. That is a fantastic possible multiple choice question. This one right here, base employment. And then if employment and population increase, demand and prices increase. If they decrease, the opposite occurs. Again, another very useful item. Supply and demand indicators are price, vacancy, and absorption. We define those, vacancy and absorption. Vacancy is existing unoccupied supply. Absorption is the filling up, quote unquote, of vacancy. Real estate supply, demand cycles, the undersupply, accelerated construction adds supply. Equilibrium is achieved. Construction adds more supply, then there's an oversupply, and then construction stops. Then there's an equilibrium, then there's a demand absorbs supply. All right, that's how that works. Then we go to market influences on supply and demand. Local economic factors, national economic trends and money supplies, inflation, government regulations at all levels. And these are all of the components that affect market influences on supply and demand. All right, go through this snapshot review. Go through it at the beginning of the chapter, listen to some of the key points and some of the things that I had stressed, then go through the details of the chapter with me, then go through the key snapshot reviews again, and then go through the exit quizzes. And that's how I would suggest that you get through this and every other chapter moving forward as you continue your exploration of real estate. I'll see you in the next section.